Okay, so is volatility coming back to the market, but also could this lead or at least show us that there could be a recession being baked in or at least coming up soon? Let's get down to this and I'll show you my proof, and of course, I would love to know your thoughts. Leave a comment down below. Let's get down, let's check out my reasons why this is just actually an interesting trade to make. So we are going to be at first looking at VXX, the ETF, iPath Series B S&P 500 VIX short-term futures ETN. Now, of course, really quickly, if you invest in something like this, it is a pretty risky trade in my opinion, so keep that in mind. There's obviously no dividends, so don't even be looking at that. The biggest part is the fact that it has a 0.89% MER, and if you're not making money, then guess what? You're going to be losing money. But today I really want to show you the volume. The volume is actually quite interesting. So of course, with the VIX, when the market goes down, the VIX goes up. Usually it goes up a heck of a lot higher than when the market is going down. So if the market goes down, let's say here, which it did, by about, I think it was 30-ish%, 40-ish%, somewhere in that range, this went from around $60 to well over $200. That's almost a 4x multiple on if you were to invest back in January, you would be making massive gains. This is one way you can actually hedge against a market going down. However, what we see here is actually quite interesting, and that is when the market is going like normal, you see normal volume here. We see that for a very long time. We see that from 2019, and we see that until about April of this year. Of course, there was a spike in volume because the market was going down and people want to play this trade. And of course, you would have wanted to 100% to get out up there. However, as we can see here, the volume went back down of volatility when the market then recovered, which would be, of course, the VIX going down. However, look at this versus this, just as an example. This is actually quite interesting. The volume happening right now on this ETF is massive, and it's going through the proverbial roof, considering that, of course, that was the volume before. Right along that line was the volume, and now it's starting to peak above that high that we had back in the midst of that coronavirus pandemic. Now, to me, this is actually a very telltale sign of maybe something happening soon, because, of course, that's a lot of volume for an ETF that is currently being traded at $24 per share. It's up about 2% at the time of making this video. This is one way that you could make a good amount of money day trading, of course, when it comes to the stock market going down. Anytime that we see the stock market go down, the VIX goes up. This is when people make a ton of money. On the flip side, if you can find ETFs that can short the VIX, or if you can short this ETF yourself during this time from the market's bottom to, of course, the market top, you're going to make a substantial amount of money. See, the great thing with the VIX is it always goes down. Whenever it goes up, it always goes back down, which means it's actually a safe way to short, or a safe way to do short investments. Shorting is when you sell something that you don't have by borrowing it from somebody else. And it's a great way to day trade, and I know a few people who do it. It's very risky though. However, I don't personally do this trade. This is all from what I've been being told by people who do this trade. But this is kind of interesting how this volume is higher than normal. And here's another piece of, I guess, proof as to the VIX going up. So this is the actual futures exchange, currently $20.45 at the time of making this video. We've seen it spike a few times, but also something else. The last time was 2008. 2008 it had a spike. Then again, we had another spike and a third spike. We always see recessions usually come in thirds. Usually. Not always, but usually. And what we see here is one big spike, kind of inverted from this one, if you think about it. But we see one spike. What's going to happen next? Actually very similar to the second half of that. But what's going to happen next? Well, this could have been that second spike, potentially. Who's to say it is, but potentially. Or could there be another spike, bigger, happening very soon? Things usually go and travel in threes when it comes to recessions. And this seems like it could happen again. Now, is this a bad thing? Is this something that you should be really worried about? Well, if you're day trading, it is something that you need to worry about. You need to know what's going to happen tomorrow because potentially that's where you're going to be making your money. However, if you are more geared towards me, where 90% of my investments are, or I should say about 70% of my investments are in dividends, then at that point, these dividend stocks, if they're solid, like Canadian banks, railways, things like that, if they're solid companies, Apple being another one, but they don't pay a big dividend, then at that point, they just go on sale. And what I mean by that is CIBC was up to close to 8% dividends because their share price went down and they didn't lower their dividend. And their dividends were getting close to around 8% back just over a year and a quarter ago. Because of that massive downturn, everything lost much of their value, and those dividends, that dividend income, then at that point just comes on sale. What would you rather have? Purchase the dividend today at 4% or wait until the stock price goes down and buy it on sale when the dividend's at 6% or 7% or 8%, or what ZWK was at, what I got it at, which was 11%. So keep that in mind. I'm not saying to hold your money forever and wait for the market to go down. That's not how you're going to make money. But there's ways to invest, like I've been mentioning, and then there's ways to see and potentially forecast what's coming up, where you could say, well, I'll only invest out of my $10,000 I want to invest right now, I'll only invest $5,000 and I'll wait. And I'll wait a week or two. And if that stock starts to floor off or starts to fall, then you're getting it on sale for the second $5,000. Anyways, that's my own personal opinion. Hit that like button, subscribe. Let me know what your thoughts are down in the comment section below, and I'll see you guys again next time.